men in the office. Good, good morning, trade pros. Welcome to Morning Market Update for what day is it? Tuesday, July the 17th of 2018. This is George from Trade Pro Academy. We got Mark and Victoria here in the office also. It's laundry day, so I'm wearing a little bit of a wrinkled shirt. So, yeah, I kind of had to fish this one out of the closet. I haven't worn this shirt in over probably 3 years. See, it fits me a little bit loose after my weight loss. None of that has anything to do with the markets. So let's jump into it. Let's first and foremost start out with a few earnings that came out. Bank of America up 4.3%, led higher by increase of consumer banking, and that's a positive driver for their revenue. BlackRock down 0.6% on disappointing Q2 flows of assets, and Netflix gets absolutely pummeled, down 14%. After hours on subscriber growth miss in a huge way, and I'll talk to you about that in a moment. First, let's take a little tour around the globe. Japan up 0.4%. Hong Kong down 1.3%. China down 0.6%, and India up 0.5%. So equities weak here in China and in Hong Kong, but Japan and India are sort of offsetting some of those losses slightly, but overall red in the Asian session. In Europe, everything's red across the board. London down 0.2%, Paris down 0.4%, Frankfurt down 0.1%. So down to a lighter degree, but still red. And in the United States, Dow's down 0.1%, S&P's down 0.2%, Nasdaq's down 0.3%. So really, other than Japan and India, everything's red. It's a sea of red in the markets this morning. And I think this market's got momentum and energy to the downside. I think we could carry through on the sell-off today. So on the morning session, in the beginning of the session at least, you could look to sell rallies and equities. Oil prices are absolutely puking. Sunday Market Analysis Live, we told you that was going to be probably the case. We gave you a support level, and it's about $1.50 higher than it is than the price at the moment. So this oil is really accelerated to the downside. Like as Stephen would say in our trading room, this market's got energy, and he's a punny guy. All right, a few big things we got to talk about today. First and foremost, 10 a.m., Jerome Powell, the Federal Reserve Chairman, is going to deliver a semi-annual monetary policy testimony on Capitol Hill. All right, and then he's going to deliver it to the Senate on Wednesday. So you have a lot of volatility-driven events. Wednesday's tomorrow. And the whole market's going to be looking at what he's going to have to say, all right? First and foremost, he's going to have a prepared statement. The format of this is he's going to read out a statement like, it's my name is Jerome Powell. I'm going to put you to sleep. That's kind of how he's going to read it. There won't be any new information in the statement, and if there is, it won't be groundbreaking. However, what investors and traders look for is a Q&A period afterwards. He's going to be testifying for hours. This isn't going to be like something with 20 minutes. He's going to start at 10 a.m. and probably still be yapping around 1 p.m. So this is going to be a 1 hour plus type of ordeal. So slightly after the opening bell, you're going to have to listen to updates from this meeting. This meeting is very important. This testimony, it's going to shape the way markets react. It'll sort of suck out the volatility from equities this morning. The reason being is everybody's waiting for him to finish the speech or say something to put some orders or size on the ladder, which means what? Which means they're canceling orders already there. So look for volatility to sort of get vacuumed out a little bit, which makes it a little bit more of a challenging day. Sell the rallies early within the 30 minutes of the open, and then wind down those positions and listen to Jay Powell. And if he says something that's tradable, trade it. All right, that's really the scope of the day. What else? Oh, pay attention to any questions the Federal Reserve gets asked about the yield curve. This yield curve is softening. It's been flattening out. And a yield curve inversion predicts accurately every single recession going back 40 plus years. So that's what he's going to be grilled on a little bit, I think, from this testimony. And it'd be interesting to see what he says. Depending on his response, that could mean they're expecting to not hike rates as quickly or hike them faster. Really, at the end of the day, the best thing to do is to come in and join us in the trading room. We trade it together. We give you all the news. You hear the squawks, and you get to trade with a group of professionals on a daily basis. It's a really nice community, very supportive, and you see all the trades. All right. Netflix. Victoria, did you just message me on WhatsApp? Oh, it's still in traffic. Yes. All right. Netflix tumbled 14% after hours last night. They only added 670,000 domestic subscribers and streaming additions versus 1.21 million expected. That's a miss. Mark, if I owed you $1.2 million and gave you 670K, how would you feel? Not so happy. Yeah, exactly. It's a great response. I would say the same thing. Guidance was 1.2 million, and they missed. They whiffed big time. That's only half the subscribers. They basically could have shut down Office for half the time and still got the same number. So they're basically blaming it on faulty internal forecasting and not on the business operations themselves, which is a little bit bogus. And I think that such a bogus excuse is causing the stock to drop even more. And Netflix has missed their forecast 3 times in the past 10 quarters. This isn't a very likely occurrence, but it's happened. And Netflix is dragging a lot of the tech stocks down, and a lot of investors are getting worried now that other tech companies might have softer earnings. The tech, that means NASDAQ's starting to go down. That means S&P is going to start to follow as well. So stay on board with those correlations. Last but not least, and we're going to end it here, a little bit shorter today. Jeff Bezos becomes, well, he has been the world's richest man for some time now. He crossed the $150 billion mark yesterday in net worth. Holy crap, that's a lot of money. That's $55 billion richer than former top billionaire in the world, Mr. Billy Gates. Billy Gates comes in the office once in a while and says hello to us. It's a lie. This is after Prime Day. Prime Days on Amazon is what generates a lot of revenue. So it allows customers to experience the Amazon experience, get a trial, and then hopefully convert to a paid membership. That's how I got my Prime. You know, I would have never gotten Prime had it not been the Prime Day, and it gave me an opportunity to try it out for free, and I haven't canceled it since, but I do use it. All right. It could generate $3.4 billion within a 36-hour window of revenue. So Bezos is looking to shift up the ladder even more. He's crossed the $150 billion mark, world's richest man. All right. That's what I got for you guys today. Here's how I'll end it off. I'm saying this. Equities are looking to start the day on a weak note. Look to sell rallies. Volatility will be a little bit vacuumed out of the market around Jay Powell, just because traders will not be doing trades. They'll be listening. And depending on what he says, there could be a news trade opportunity, but you really have to have a news wire or some kind of audio squawk service to be on top of this. Otherwise, if you don't feel like messing around with this news stuff, then you could comfortably take the day off. Just walk away. There's nothing wrong with it. One of the best parts about the job we do is we decide when we work. Yes, if we don't work, we don't get vacation pay, but you know, the paycheck that's possible by trading far exceeds anything in the 9-to-5 workplace for the majority of people. I mean, you know, there's some CEO and leadership executives that can make multiple millions, but you could do that trading too. So the benefit is, if you want to walk away, take a day off, this might be a good one to take off, just because it's not going to be easy. There's going to be opportunity, but when you compare it to the difficulty of it, it's not going to be the easy kind of opportunity where you just lift an offer, hit a bid, and you make 5-6 handles. It's going to be a harder day. We're going to have to work for it. So we're ready to work for it. That's what trade pros do. We're going to turn around, look at this market, set some levels, and jump right in. So YouTube, thanks for tuning in. Have yourselves a great day. I'll see you guys tomorrow at 9 a.m. All the best. Manage your risk. Trade like a trade pro. And now we turn around and trade. See you later, guys. Goodbye. I'm tangled in my wire or my cord. Entanglement theory. Thank you, Marco. Lights out. Take care, guys. Goodbye.